Hi everyone, greetings for the day. A quick recap on the markets for the last week, and it was marginally up for our markets, around 28 points on the Nifty. And more of a volatile trading session was seen here last week. We went up to the new highs, then the correction was seen, and profit taking was the flavor of the trading activity what we saw in last week trading session, primarily driven by muted or some disturbing cues from the global markets, particularly US, where talks about US president getting being impeached was doing the rounds. And as far as Trump's history till now goes, things have not been very placid. It has been very volatile, and the type of reforms which he wants to do is not getting the political mandate it should, and that is creating all the noise and trouble out there. In between that noise and trouble, US market did crack, but at the same time, last day of the trading session saw some recovery coming back into the US market. However, emerging market and European market continue to be in a firm grip, and that equity has not let up or down. Same was seen in our side of the market, in spite of index cracking for the highs. Still, immediately around 9400 kind of a levels, buying was seen in the domestic market, and the flows were strong. First, have a look at what the FIs have been doing till now. For the month of May so far, they have been neutral as far as the cash market position is concerned. At the same time, index future position is concerned. However, on the derivative front, they have been building on some hedge positions by buying put. Around 40,000 odd contracts of put longs have been created. At the same time, 20,000 contracts of call writing has been done by them. So more in lines to protect whatever cash buying they have done, they are protecting that by against any trading fall if it happens in the market. So largely a muted kind of an activity from their end. Our earnings season so far has been very good. Almost 70% of the earnings have been through, and they have been either in line or better than the estimates. Particularly the PSBs, that is the public sector banks, they have come out with stellar set of numbers, and that was the expectation that they would come out with good numbers. But they have outperformed the expectation in a big way. SBI came out with numbers which was much better than what everybody on the street was expecting. Same was the case with Bank of Baroda and BNB. The noticeable thing out there was deceleration in the slippage of asset quality. So the asset quality slippage is now getting arrested. At the same time, upgrades and recoveries have been formed, and the whatever slippage is there is from the existing basket. So that's a heartening fact about the asset quality of PSBs. And though they are at all-time high, so some profit taking can be seen there, but at the same time, a meaningful correction would be bought into looking forward into the economy. Government rolled out the GST tax slabs, and that was very much in line with the populist measure. If you see, all the FMCG basket was given a big relief of 7 to 8% on the taxation front on for in the GST. At the same time, food and food grain articles were priced at 5%, which is again a big relief. So the companies like Colgate, Marico, ITC, HUL, they all will gain from this GST pricing on two counts. Firstly, the input which goes into making their products will be priced at 5%, and at the same time, the finished product which they delivers to the end consumer would be priced at around 18%. So this entire gain from the taxation will be passed on by the companies to the end consumer. That is what all the managements have guided. They won't be parked with them, so there won't be any margin accretion happening. But at the same time, because of the lower prices and better affordability by the consumers, their volume will grow, which will add to the absolute profitability of the company. So this is a big positive. At the same time, toothpaste makers like Colgate and all benefits from a lower tax rate, because there was a stiff competition posed to it by the likes of Dabur or Patanjali, which were not taxed. So now with lowering of taxation, their premium products with lower prices can gain more accretion or with rural and semi-urban areas. So they are targeting that. At the same time, companies like Britannia, where the input like atta and maida and all will be priced at, taxed at 5%. So input price goes down, and the premium biscuit products they would be paying around 18% kind of a tax. So this benefit will pass on, lowering their prices. Again, some more fringe, consumers will come into buying their products. ITC gains from no change in the tax rates of the cigarettes, but at the same time, the inferior counterpart like BDs would be taxed at 160 to 190%. So some migration from those customers to a higher end cigarette product can be seen. Though I don't recommend smoking is injurious to health, but at the same time, the company benefits from the tax scenario. At the same time, the food product division will gain from both input price lower taxes, at the same time finished product lower taxes. So it again stands in a sweet spot. However, automobile and auto ancillaries, they don't benefit from the GST rates. Either they will be paying the same rate or a marginal higher rate of taxation of around 1.5%, which the assumption is that it would be passed on to the customers, and they won't mind paying additional 1 or 1.5% extra on the finished product, because they are high price products. So if somebody is buying a car for say like 5.5 lakh, so they won't mind paying 5,55,000 on that. So that is how the thing has been placed. Cement again as a sector which was paying around 21 to 24% kind of a tax would be paying around 28%. Again here the belief and the theory is that it will be passed on by the cement manufacturers gradually to the end consumers, and that would be absorbed by the users of cement as well, because there has been a huge infra thrust by the government, and housing activity is also picked up in tier 3 and tier 4 kind of cities because of the tax subvention being given to housing loans for a low ticket like 9 lakh and 12 lakh, 4% and 3% respectively, that is there. So overall, net what we see, the government has been very firm in pushing through their policy reforms. Now GST was the last on the anvil, which is being through and is likely to be implemented by 1st of July. And the macro environment is already favorable for India, and monsoon prediction by MD so far has been a normal monsoon. So that would be kicking any time in the first week of June. So all this plays out, earnings season good, monsoons kicking in, GST through, other policy reforms working well, corporate India is already on the up move. We do believe that a running correction, if any, in the market will be bought into, and market will move to higher trajectories and a new highs. So for the floor, level wise, Nifty can test 9200, 9250, so that is the maximum downside we see in the market. On the higher side, this being expiry week, it's unlikely that it will make a new high. 9500 will play a hurdle for that. But beyond that, going forward into the future, we expect new highs coming into the market soon. That is it. Thank you.